Thank you very, very much indeed. I have a lot of comments, but I don't want to start with my comments. So it seems to me that what is very important is that we are in the remarks, comments, and questions, and I would urge questions more than long comments. We ask those speakers that we are particularly stimulating in your view. So first, second, third, please.
Thank you, Jean-Claude. One trend I want to mention, which has been going on for a while now, is the concentration of corporate power and corporate performance. I'll just give you two stats, one American, the other one global. The first one comes from a study from the White House, and that compared the performance of the top companies versus the average company. 30 years ago, the top 10% of companies would double the performance of the average company. So the average company, say, was at 8%. The top 10% would be at 16%, reasonable. Now it's a factor of 5. You see the difference, right? Another stat that is very striking, and that comes from a McKinsey study that was conducted for the year 2019, but doesn't really matter. Over 6,000 companies the top 6,000 companies with revenues of more than $1 billion a year, okay? And if you look at the top 10% of companies, they make 80% of all the net income. You see the concentration, right? And 60% of these companies that are supposed to be superstars are actually, they have zero net income, right? 60% have close to zero profit. Of these big companies, huge discrepancies, and give you a sense of, and that's playing again in favor of the US. And the same thing could be said about patents and intellectual property and exports. You have 1% of companies generating 2/3 of the exports in the world. Huge concentration. I think that's something we should mention.
Thank you very, very much indeed. Gabriel has the floor.
Yeah, thank you, Jean-Claude. So many very interesting presentations. Thank you very much. There's one thing that keeps puzzling me. For example, in the charts that Pierre Jacquet showed, now we see negative TFP growth, and that is very hard to understand. So how can it be? I mean, and would that go away only if we have more investment? I mean, capital stock is in the production functions that are being estimated. So how can we understand negative TFP growth? And of course, one needs a little bit more complicated frameworks to see how that could work. And one argument that immediately comes to mind is that for some reason, the efficiency of factor allocation has deteriorated. So that is one source of we have capital stock and the human capital that we have produce less. And what could that be? Is it bureaucracy? Is it maybe, Sébastien has a different view, but is it maybe the decoupling or the de-risking that's happening, so that some gains from trade are being lost? Or is it, for Germany, for example, is it something that has to do with the terms of trade deterioration? So that imports have become much more expensive, but the export prices haven't gone up as much. It's something that's not captured in the models, but would that pop up? So I think we need, in Europe in particular, to understand better what's going on. And this, I would like to link that to the Draghi report, because there's one underlying assumption in the Draghi report, that is if we invest more, we will have more TFP growth. Now that is a good old argument that goes back to the Solo 1.0. The growth model that we all learn is the Solo 2.0, but the older one has embodied technical change. So the idea is that by investing into new machines, into new techniques, TFP growth is pushed forward. But of course, the composition of TFP that we're using is not using that model. No? It used a very, very straightforward decomposition of GDP per capita or GDP growth. So there's puzzles, and I think before we start throwing much money, we should better understand the numbers, in particular, understand why TFP growth is negative. If it's slow, I can't absolutely understand why it's slow, but it being negative and not just driven by cyclical phenomena, that leaves me puzzled, and I'd like to hear the view of my colleagues here. Thank you.
So, question for Pierre, and I would echo very much Gabriel. And by the way, I could see, and that creates a little bit of uneasiness from my part, because I have the memory when we were saying TFP has been fantastic in all advanced economy, US and Europe, from 95 up to 2006. And then there has been, bizarrely, a stagnation which lasted long, or it does not appear in the figures we could see. There is no such difference. It's much more constant augmentation of TFP. So, I mean, a lot of methodological, perhaps, if we could know exactly how it was constructed, it would be very useful. But I turn now to the third questioner. You have the floor.
Thank you very much, Mr. Chairman. A lot of things have been said, giving various perspectives from different parts of the world and different sectors of the economy and the financial world. A lot of things have been said also about what's going to happen after the inauguration of Trump on January 20th, 2025. Tomorrow, the last session before the closing session tomorrow will be dedicated to Trump policy, economic policy, and foreign policy. So I will be part of this panel, and I will probably answer to some of you some of the scenario like Jean-Claude Meyer. We'll talk about that tomorrow. What I would like to give a sort of different perspective. I've been in financial services around the world for 40 plus years, like many of you. One of the things that concerns me probably more than anything else at the moment is how we're going to finance the economy going forward. And schematically, we used to have a situation over the years where in Europe it was largely done by the banking sector, and outside of Europe, and particularly in the United States, it was done by the capital markets. But then that's what I would say, this is the situation for the very large corporation. And when we come sort of one level down, the middle market, who's going to finance the middle market going forward? The reality is that both in Europe and in the US, the middle market is no longer financed by the banking sector. They run away from it largely because of risk consideration and also risk-reward ratio. The banks don't want to finance the economy, to be as simple as that. We like to organize. I used to be part of that. I was for many years at Citibank. We would love organized credit, but we would not keep the credit on our books. And we would like to distribute it to the market. So going forward, this trend is, in my opinion, something that's going to worsen. And now we have a situation where the economy is largely financed by private equity and also asset management companies. One of the largest in the United States lender to the middle market sector is a group that I suppose many of you have never heard of called Churchill Asset Management. This is an asset manager which has a lot of liquidity and finance the middle market. This is good because at least there are players in this sector. At the same time, there's no, and I'm not in favor of excessive regulation, far from that. But I mean, this is a sector which is totally unregulated, that could potentially represent some significant risk. And you heard of this one, but I mean, other sectors of the economy, the shipping sectors, industrial sector are purely financed by private equity. So we have an issue of access to funding and liquidity going forward. We have the risk aspect, and we have the problem of too big to fail. So because we've seen in the past situations where non-banking were rescued by regulators, central banks, and you're probably all aware of situations like that. This is no longer something that necessarily be available. So this is a matter of concern in terms of systemic risk, but also funding of the economy.
Thank you very much indeed. Very important remark indeed. But you put on the same footing Europe and the US, where there is obviously an immense difference. Huh?
Absolutely. No, I'm not saying the situation is the same on both sides of the Atlantic. What I'm saying is that this is a concern. It used to be in Europe, the bank would finance. 80% of the economy was financed by bank, and in the US it was 20%. Now we are in a situation where on both sides of the Atlantic, we are sort of going in the same direction. But you're right, I mean, the availability of funding is much bigger in the US than in the rest of the world. No question about that.
Thank you very much. You asked for the floor, sir.
Yes, I actually had a comment which is rebounding on what's just been said on private equity financing. Just for information, I run a 1.8 billion venture capital fund investing in technology and digital technology. And I heard, many comments on how much productivity is absolutely crucial and tech is a key productivity factor, and productivity and tech, therefore, is a key driver of growth in the economy. I just want to stress, how huge the gap is between, and it's been said, between the Europe and the US. But just to give you a few numbers, I mean, the venture capital in Europe is about 50 billion in terms of volume. In the US, we're close to 200 million. So it's a 4x multiple just in private financing of the technology. And if you add to that, the seven magnificent worth 17 trillion, it makes also a much higher multiple in terms of difference, because the largest market cap in tech, for example, in France, is a company worth 50 billion, whereas you have 7 companies worth more than $1 trillion in the US. So if you add the private equity financing capacity to the large corporation financing capacity, the difference between Europe and the US is probably I would say, something between 10 and 15x in terms of difference. So we have it's a huge challenge because, and it relates to the comments that's been made on how much productivity is important in growth, because we lag behind. And the AI world and investment is going to increase very much this gap, because AI depends, as you said, that investments in large language models are very important, and AI depends very much on computing power, and computing power is mostly in the US in these large corporations. So I see this gap, widening, and I see also the venture capital world in Europe having somehow less and less capital, because the state doesn't have much capital in Europe. The private, there is no pension funds in Europe. Pension funds in the US invest in the US funds. So I see a challenge there in terms of how do we, and that goes to my question, how do we finance innovation in Europe? And you mentioned at the beginning that we need to do something with private money in Europe to try to reorient this private money to innovation. But I think that's the only way to do it, because I see no other resources to finance innovation in Europe. So my question is, how do we do it?
Very good question, indeed. I respond immediately to what you just said. We are exporting our savings. The US is not financing itself by far. And I mean, as an average over the last period of time, I would say plus 3% on this side of the Atlantic, minus 3% on the other side of the Atlantic. So where does the difference come? In my opinion, of course, we did not complete the single market. And that is something which is an immense handicap. We do not have a capital market union. The Noyer report was mentioned. We do not have a banking market union, which is the paradox of the paradox, because we created Europe for having a common market of goods and services. Then we said, no, common market does not suffice. Single market, real, achieved common market. And then we invented the single currency. And in a single market with a single currency, there is no single market of the commercial banks. and we could experience that even recently. We see that there is no single market. So, of course, that makes an immense difference with the US, because we compare ourselves to the US permanently, and the US has a single market, and we do not yet have a single market, particularly in the domain of finance. Another element which is very important too, we are not an achieved political federation. The US is an achieved political federation. The dollar denominated, the bills denominated in dollar and the bonds denominated in dollar have only one signature, benchmark signature, US Treasury. We ourselves have a dozen of signatures in our bonds in euro and bills in euro. Of course, the Bund, the OAT, the Italian Treasury, and so forth. So, not surprisingly, the difference of depth and liquidity of this market is in the proportion of 1 to 15 or 1 to 10 when you compute. So we are in a totally different universe, in my opinion. There is a glass ceiling. We are not a political federation. And that makes all the difference between, in my understanding, between the euro and the dollar. And if we were a political federation, I hope that we would have really a banking union and a real capital market union. It would appear to be much more simple. So we have to incorporate that in the comparison. Otherwise, we are desperate. What I hear is makes you totally desperate. I mean, the European will never, I would say, improve their situation. Yeah, please.
Just a quick remark, and I'll repeat what I said this morning. There's a lack of profitability of European ventures in tech, and that makes a big difference, when you have to invest. And you see a lot of European capital flowing to the US for that very reason,
Yeah. Well, one of the problems, and Gary was very stimulating, is it true that this profitability would be there in the longer run? And maybe we can have some doubts, but that's another story. So I take the permission I gave myself, if you permit, to make some remarks on what all we heard, because it was extremely stimulating. Sébastien mentioned the dollar level, the issue of the international monetary system. So this idea that it suffices for one of the partners in the global monetary system to say, I want my currency to go down or to go up, we know that it is not as simple as that. There are de facto grouping, informal grouping, where you discuss that. The G, you put the name, because now in the G7 we have 3 countries that are united in the euro. But it has to be discussed. No particular country can solve the problems. And when the US wanted its currency to go down, we had the Louvre Agreement, and then the Plaza Agreement first, then Louvre Agreement. So we will see whether we go towards reviving this informal monitoring of the international monetary system. But to expect that it would suffice that Mr. Trump arrives to engineer a much lower dollar, US dollar, seems to me a fantasy, obviously. Even if on top of that you have, of course, the coherence of the various measures that are in mind. As regards André, on the reserve assets, the figures are the following, if I'm not misled. The reserve in US dollar, as much as they are displayed by the BIS, were approximately 70% at the moment we created the euro. After progressively, over a period of 25 years, it went down to 60%. So there has been 70 down to 60. The euro did not took advantage of that, because the euro is at 20%, was more or less at 20 at the very beginning. went up a little bit, then down, and is at the same level as the moment of the setting up of the euro. The currencies that benefited until now from this shift, 10% shift from the US dollar, are convertible currencies, the sterling, the Canadian dollar, the Australian dollar, mainly. The renminbi, which is not convertible, is not yet really in this competition, as far as I understand, even if there are much more trade that are denominated in renminbi. And of course, the sanctions that are decided upon by the Congress in the US are really shooting in the feet of the dollar. That's absolutely clear. And it will have consequences. But until now, we have a domination. You're absolutely right. The dollar remains at 60. We are number 2 at 20. And the yen, which is, if I'm not misled, the third currency, is at 5. So there is a big difference between number 1, number 2, and the others, if I may. I would also say that the valuation, it was mentioned by André and by Gary, and implicitly also by you, John. The equity valuation in the US is, I have to say, in my own computation, extremely abnormal in comparison with all what we had observed from World War II until, say, Lehman Brothers. There was oscillation between the various indicators of valuation of equities, but we were in a corridor which was not gigantic. Now, since Lehman Brothers, and more precisely since 2012, there is a start of the pickup, and we could see that in your chart. And then it picks up and up and up and up. And if you compute the standard deviation between the two valuations, in 2012, in my memory, the valuation of the US stocks and shares started to pick up from a midpoint in comparison with the European stocks and shares. And then it was one standard deviation in 3 years' time, then 2 standard deviation, then 3 standard deviation. At the moment I'm speaking, in the figures I have in mind, we are close to 4 standard deviation for the US valuation over and above the equity valuation in Europe, which seems absolutely fantastic, extraordinarily improbable in comparison with all the history of this valuation. So I thought it was due to the Magnificent Seven. But even if you retire the Magnificent Seven, you still have several standard deviation over and above the European. So I thought it was that the European were totally miserable, and that comparison with other countries, other markets would give us something different. Not at all. Not at all. The US is superstar in terms of valuation vis-à-vis the rest of the world. And even the figure, you mentioned 50%. I don't remember who mentioned the 50% valuation of the US stocks and shares in comparison with the global valuation. But perhaps, yeah. I understand that if you compute now, you're probably even over and above 50. You're probably at 60 plus. And it came only on a few, 2 years, from 50 to... So there is something there which is extremely troubling.
Which is related to this concentration.
Yeah. Immense concentration, immense expectations. And, expectations would be fulfilled if...
ratios are not that extravagant. They're high, but they're not that extravagant.
Oh. No, they are pretty high. Pretty high, frankly speaking. But again, we will see what happens. But clearly something has happened since Lehman Brothers. Pardon?
I think Gary had a point.
Oh, I'm sorry.
I'm sorry. He made a point.
Yeah.
And I just elaborate on his point.
Yeah.
I think there's two cases. There's the so-called Magnificent Seven, which are real businesses, like something called Amazon, for instance.
Yes.
And as you know, Trump just said that he would kick out the Lina Khan, who was the antitrust, going to go after these people. So that's out. And there is the bubble. The bubble, well, which includes AI and drugs. I mean, the ones on I forgot the name, which allows you to lose weight.
Yeah.
Okay, so that is, these are partly bubbles, because the amount of money raised assume that somebody would have to pay for that, as you said. So there is an element of bubble, but there are some real businesses involved.
Yeah. No, it's absolutely obvious that we have real business, real innovation, real and fantastic, I have to say, capacity to organize what I would say. It seems to me that it was what came out of what John said, a fantastic illustration of, I would say, Schumpeterian restructuring. You take advantage at the very moment of the COVID to eliminate a lot of jobs and recreate the new jobs. And of course, nothing of that kind appeared in Germany or in France or in Europe in general. We didn't have the capacity, I would say, the social cohesion capacity to restructure.
It takes too long to restructure, as I was saying this morning. That's the key difference.
Yeah. But if, the idea was, let's not restructure. The idea was Kurzarbeit, how would you say that, Gabriel? The Arbeit? Kurzarbeit, yeah. Kurzarbeit. And it was considered in France miraculous to embark on Kurzarbeit, which was invented by Germany and the German-speaking countries. So we did exactly the contrary, and we could probably not afford to lay off a lot of people because it would have created a revolution. So we have to do the same like the US, but slow, much slower, as you said, of course. We are not Schumpeterian, perhaps, as you're able to. But the price to be paid for that might be a dramatic political change. There is a price to be paid for that. And maybe Mr. Trump comes because of that. That is pretty possible, it seems to me. So I had a last point, but I think last point on I already mentioned that, and I think that we have to work very, very much on what you said, Pierre, and what John said on productivity. Are we sure that those figures are reliable? I can tell you that I have other figure in mind. The output per capita in 23, so a very recent level of output per capita. And I have in mind the European and the US. Paradoxically, perhaps, some relatively small countries in Europe have a more important output per hour worked, not per capita, per hour worked than the US. Germany and France in 2019 had a level which was for France at the level of the US and for Germany a little bit higher than the US. Now we are both below the US level. Not far. Germany is only, in these statistics, output per hour worked 2% below the US level. And France is 6% below the US level. But these are not two different universes. And of course, I'm speaking of the most advanced economy in Europe, and you have a lot of economies that are catching up. So they are, of course, they have an output per capita, which is per hour worked, which is inferior. And the average makes, of course, us with output per hour worked significantly lower than the US. But I'm not sure that we are really, speaking of the most advanced European economies, in a totally different universe on that front. Of course, because we privilege leisure, vacation, and golf. And I'm very happy that the US are embarking on golf now. No, but it's absolutely clear. Our political arbitrage is very different on this side of the Atlantic. And Germany, I thought Germany was in a different universe, but not. We are in the same basket with a lot of...
I was working in Germany at the lowest end.
Yeah.
Will you allow me
Yeah.
a remark, Jean-Claude?
Sébastien.
When you look at this comparison, of course, we're all perplexed with this comparison. What I find very striking is that where there is a kind of décrochage, my feeling is that it's in terms of investment in Europe following the global financial crisis and the euro crisis. Investment never recovered, public and private. So it's linked. My opinion is that it has a lot to do with the way we dealt with the crisis, which has been deflationary, which has been really limiting investment, public and private de facto. And so now we are in that stage where we're lagging behind in terms of productivity, but perhaps in terms as well of macroeconomic dynamics.
If we have invested so much less, then we have a smaller capital stock. But it's not necessarily saying that we must have negative TOE.
Sorry, just a point on this. I agree, but honestly, I think we cannot assume that we fully control and know about the dynamics of productivity and investment. So I think it's closely linked. I would not disentangle, I would not be assuming that we are perfectly measuring that and the relationship.
Can I comment on that? I totally agree about the fact that we are using data which are very, very imperfect. And we are back to Solo to some extent. We are still with this black box of total factor productivity, at least in accounting terms. This comes as a subtraction between the rate of growth and the estimated rate of growth of the capital stock, and the rate of growth of labor. So it's something that is very, very weak. But for me, it tells a story about innovation, which has not been dynamic at all in Europe. We have not embarked on the current industrial revolution in the same way, which may not be a catastrophe over time, because in the end we will be able to apply the benefits. But right now it is certainly a source of a major difference. By the way, coming back to a discussion that we had in the plenaries, in the earlier industrial revolutions, it took 50 years to see the full benefits. The work by Paul David illustrates that very, very well. Now there is a debate about the current revolution, both with Robert Gordon books, which was a little bit before AI, the AI hype. So I mean, he might, I don't know whether what he thinks the same thing now or not, but he was very, very pessimistic about the capacity of the IT revolution to bring benefits comparable to the former revolution, especially electricity. But also we have a debate right now between, say, Acemoglu and Brynjolfsson about whether artificial intelligence will increase productivity in a sustainable way or not. And the studies, and it's too early because the studies that we have show some very clear, substantial, but limited in scope productivity gains for the less qualified workers. I mean, I find this very interesting because it creates optimism if it can be scaled up and generalized. But measuring total factor productivity, I agree, but it still tells a common sense story. And I'm sitting in a country, France, in which I think that there is a lip service about the importance of education and research, but it is lip service. in terms of actual policies, I don't see what is being done to actually strengthen research and education and so on. And as a citizen and an economist, that worries me very much.
Pierre, can I suggest that the public spendings of the French budget are already 8% more than the average
But not
of
on
the
the
euro
right
area?
thing, not on the right
So,
things.
so don't call for more spendings, call for re-arbitration.
I call for higher quality of public spending. Which is
We
very
agree.
different. I'm not talking about more spending.
No, but I mean, I agree with you, but we have to pave the way for
but
the
I think
new
the adjustment should be planned ahead and gradual over time, because if not, we are plunging into a recession, and that won't help. And by the way, that leads me to another remark. I don't know whether Gabriel will agree with that, but part of the reason why we are spending our savings to the United States and China is a much more substantial financier of the US than we are, but still, and when I say we, it's not France, actually, it's Europe as a whole. But it's partly because domestic demand in Germany has not been dynamic very much, but also partly because companies don't see investing opportunities enough in Europe, and this is linked probably. So that's, I think we can't discuss all this without looking at the macroeconomic policies in the various countries.
We could add, because we have no pension funds like the US, and the European countries that have pension funds are doing a much better job, the Netherlands and Sweden.
Yes.
We could also say that, I mean, there are many reasons why we are.
And we want to keep the retirement age low enough.
Yeah. Thank you, Ahmed. Please.
Thank you. Just to come back to some of the things that have been said, when those handicaps that we're talking between Europe and the United States, in my opinion, we have to go back to sort of after World War II, when the beginning of the European construction with the CECA and then the Rome Treaty. At that point, we were talking of 6 European countries and 6 European countries only. And over time, at that point, there was a discussion between confederation and federation. And in my opinion, we've experienced 2 unfortunate situations, 2 events. One was the fact that we choose the enlargement of the European Union versus more integration. That was a choice, a political choice, but we have to live with that. We moved from 6 to 27. Obviously, it was much more difficult to reach unanimity rule, I mean, to come to this federalism, political federalism that you were making reference to. The other thing is that I think one of the reasons why we have so many difficulties in Europe in dealing with some of the issues that Jan mentioned, the restructuring and so on, is the fact that it comes to a large extent from the Brexit. Because the fact that we had the UK in the European Union was a way to balance what I would say the continental social democracy and the free market philosophy of the Anglo-Saxon world. And by losing the UK may have lost a lot because of the Brexit, but I think Europe has lost a lot because the UK left Europe.
Right, but we did not decide to expel the UK.
It
was even not the will of the Prime Minister at the time of the UK. So it's a de facto situation which is very unfortunate, and we all considered it was very unfortunate. You're absolutely right. Absolutely right. Madam.
Yes, and I'm so sorry because I arrived late and I dare to ask a question all the same. But to Pierre, because you speak about Acemoglu and during the plenary session about how to reintegrate politics into macroeconomy, which is also the subject. And how do you compute the fact that we have lower inequalities than in the US, first of all? And second point, that we have also, when I say we, it means all European Union, more or less, we can go more in the details, but from the point of view of inequalities, still it is very clear if you take all the data of the inequality database, which is very interesting from all the point of view, revenue, wealth, and so on. And second point, the level of polarization, political polarization, which is also lower, even if it's growing in Europe and especially in France, still, when you look at that, no, but you have very serious surveys about that, showing that the level of polarization is lower. And you know the story, the political story of the US is not over with the election of Trump, which will also impact the economic story. So how do you integrate also some of the advantages of Europe from this point of view? I'm trying to think about Acemoglu long-term lessons.
No, but you're absolutely right. Of course, we are living, experiencing different values. It's absolutely clear the COVID is a case in point. The COVID was utilized by the US to restructure massively with a lot of people laid off, and in Europe, nobody did that. Of course, we are in a totally different universe in terms of values, but I don't know how you compute that, Pierre.
No, I'm not sure we can compute that, but I would like to make a few comments on that. It may mean that we shouldn't care that much about the difference between the rate of growth, because if we care about inequalities, what will matter is how the benefits of growth are actually distributed over time. So I think we need to work more on income distribution and try to understand what happens. But still, we need growth. And we need growth to maintain our social choices over time. And in the current debate about no growth versus growth, I think the advocates of no growth forget that we need to finance the kind of standard of living that we want. So it's something that is important. Now, we need to redefine what growth means, and we need to work on how to extract value from the things to which socially we would like to give value, and that is something that has become very, very difficult to do. Final point is that, going back to a discussion that took place also in the plenaries, I think that if we want to achieve more productivity and more growth, we need to be a little bit more populist. The reason, but in an intelligent sense of the word, meaning that we need to care about the populations rather than about the elite absorbing most of the benefits from growth. One of the reasons,
more democratic, more Republican.
Absolutely,
Do you agree with that?
Yes. One of the reasons why we are experiencing the political difficulties, including in Europe now, is the fact that a number of segments of the population have felt, wrongly or rightly, by the way, it's a question of perceptions, that they were excluded from the benefits of globalization and the benefits of growth. So they object. And so we need to tell convincing stories that if we want people to benefit, we need to organize the economy in some ways. It's not well done.
Thank you, Gabriel. And yeah.
Reply to your point, I think this is very important. GDP is not the same as welfare.
Yes.
And one of my favorite papers is the one by Jones and Clino, 2016, in the American Economic Review, the title Beyond GDP.
Yeah.
And what they do is they use straightforward neoclassical economics. You don't have to be heterodox or do funny things, but we have ways to deal with inequality. Inequality ex ante is like risk. It's not good to have if you are risk averse. We can deal with the fact that leisure is good. Yep. We can consume goods. We can also consume time. And so this is a big paper, a famous paper. I teach it as soon as you can to the first students that I get, because the focus on GDP and GDP only is or can be misleading, because it's not a measure of the quality of life. It's funny that we had those commissions. I think France had one, the F2C, Stiglitz. Yes, the German Bundestag, as Norbert Röttgen knows, they had a commission as well. It was all over. That was like 15 years ago or so. And it seems we have not really learned our lessons, and that might mean that
Yes.
the discourse and the public debate is a little bit biased, because we might be too upset by by the GDP per capita numbers. And the Economist, as my last word, a couple of weeks ago had a nice picture showing rankings of countries regarding GDP per capita, GDP per capita, in PPP or not, and then GDP per hours worked. And it's interesting, as Jean-Claude said, in GDP in hours worked, in Europe we're actually quite good. If we manage to bring more people into employment, we would also increase GDP per capita so much more. If we manage to get people work more, but that has a cost. If leisure is something good, we have to give this up. So, anyways, it's complicated as always. But the focus on GDP per capita, I think, is misleading.
Thank you very. No, I'm sorry. You'll have the floor after, please. Immediately after.
Yes, I'm going to complexify the debate because there's one word that we haven't mentioned here, which is climate change.
I mentioned it.
Climate change. So we have discussed relatively short-term productivity changes, even though we have referred to long-term curbs. Now, one very important consideration is that when you are in the corporate sector in Europe, and especially in France, but I mean to say it's the European sector, corporations feel climate regulations are extremely tough, and being a very important reason for their lack of competitiveness when compared to the US right now, and an important reason for shifting investments to the US. Now, this plays short-term. Long-term, if the US is to continue emitting CO2 at high levels, and if the EU curbs its emissions, which is taking place right now at a relatively significant pace, what is going to be the overall macro impact, and who is to be the ultimate winner of that specific competition? Of course, if we are the only ones to curb our emissions, and if we have any way to tackle the challenge of adaptation, because anyway climate change will take place, we would have lost on two sides, bearing the cost of reduction and anyway having to weigh the cost of adaptation. But on the other hand, if the US has ultimately to engage into very severe emission reductions over the next decade, because anyway climate change will be unsustainable, adaptation will not be enough, then very severe changes may also take place. So how, I would like to ask back, maybe I was too long, I apologize for that, so I would like to ask back our colleagues how they compute, to take this word again, this issue into the respective changes of competitiveness between the two sides of the Atlantic, bearing in mind that right now it's playing against the EU very clearly, but will it last?
We do not have yet, it seems to me, the decision of President Trump. So at the present moment, I mentioned the international standard grouping, which is has been recently created. In principle, it is recommendation for the entire world. We will see exactly what happens. But Pierre, how would you compute that?
I think we are in a process of redefinition of values, and right now we can't really compute it. I mean, we need to take prices of carbon. We could do that, but who decides about what price of carbon will be? The markets are not working really well. They are very sensitive to government policies, and they may differ. So it's a question of choice, and it's a gamble. It's a gamble over the future. We are not taking the same gamble. If you believe that in the future, the only companies that will be profitable will be those who are producing less carbon, then what Europe is doing now is to create an environment in which the only way to create a company is to do that, and that may succeed. But even now, Jean-Claude, the US companies are much less constrained than the European companies, and it's mentioned by European companies as a major competitiveness problem. And does it mean that we should renege on these commitments? I personally don't believe it, but it's a gamble. I don't know, basically.
No, it is true that the European Union wants to be the best pupil in the classroom systematically. It is inbuilt in our system. Maybe we do exaggerate a little bit because we cannot afford losing on the US. But that being said, the US is much more complex. You have states that are totally against any kind of green transition, others that are very, very much in favor, like California, if I'm not misled. The federal government was accompanying the global consensus. Perhaps the federal government would be against. The Republicans are more or less against. Now that they have the control of the Congress, we are in a different universe. But, I mean, it's very complicated. And, of course, we are living still in an open world with market economy. And if some have an incredible competitive advantage, then we will pay a price in the long term. That's absolutely clear. Who asked for the floor? Yeah.
A very brief point, I'll go back to the issue of concentration in the context of inequalities. Let's not forget that a lot of income inequalities between individuals come from inequalities between companies. And in fact, if you look at the ratio of the salary of the CEO versus the average employee, unlike what the press is saying all the time, that ratio has been fairly stable over time for most companies. It is diverging only for the top 5 or 10% of companies. So it's really right there, a concentration issue again.
Thank you very much. Who wants to take the floor? I'm sorry, John, over there, and then John, and then you, madam. Yeah.
Hi, I just wanted to say thank you. It's a big honor for me to be in the same room with such brilliant minds. It was really, really interesting. I have one question. I think I'm maybe the youngest person in the room here. What really interests me is with all this, from 2008, for example, the balance sheet of the Fed went from $1 trillion to $7 trillion in 15 years. What do you think is the future of cryptocurrencies? Will they be more used in the future economy? Because recently Jay Powell said it was the digital gold. And how do you see President Trump's administration faring with crypto? That's just
okay. Thank you. Good question. John?
I would like to answer to this.
Yeah. So you're registered. Okay, later on. John, you have the floor.
Just a few comments. One, I actually was a student of Paul David's, and his message, one of his messages, of course, was that in practice, productivity tends to move in waves. And what you referred to, his Computer and Dynamo seminal paper in 1992, which said basically, if you remember Robert Solow's famous quip, you see computers everywhere, but in the productivity statistics. And Paul David's answer was, that's because you spent too much time with your econometric models that insert productivity gains as a constant. And in fact, that has nothing to do with how the process works in the real world. And in 92, he said, what we're about to see is the productivity gains from a network computers, i.e. the internet. And so it passed. And I think clearly it could be wrong, but there's a tremendous amount of optimism that we're in a positive wave upward in productivity gains from AI. And this we'll see. If there's undoubtedly is typically too much optimism, but it's certainly a plausible argument that this is real. Second, I lack enough expertise, but my impression was that in terms this issue of climate and governmental attitudes towards climate change mitigation, in fact, the performance of the U.S. economy has been quite good in terms of emissions, in part because the success in fracking and the reduction in the cost of natural gas has meant that basically natural gas has replaced coal as a source of electricity, and as a result, emissions actually have fallen. Now, this doesn't guarantee that it will go on forever, but in fact, as you all know, that in the case of in Europe, I thought the increased use of renewables in a place like Germany has increased the use of coal, not decreased it.
It's a transition.
Yes, yes, yes. So but more broadly, just
in variation, not in level.
Yeah, of course, of course.
just more broadly, I mean, it's quite striking. As opposed to years ago, I think there's no disagreement that climate change is real. So the question worth asking is, if there's a great consensus that this is real and something needs to be done, why has so little been done? At the Bretton Woods Committee, we produced a study on this under the guidance of Axel Weber and Joaquin Lévy, who I suspect is known here. And essentially, it seems to us that the problem, there are three essential problems, or three gaps in terms of the approach with regard to climate change worth mentioning here. One, governance. There's no standard governance authority with regard to what has to be a global effort at reducing, controlling emissions. Secondly, there's no clear standard of implementation. In other words, how do you know if you wanted to do something, what would you do? And where would you go to be sure that action X would produce output Y or result Y? And there's no standard of accountability. If you were an investor and you wanted to invest in climate mitigation, who would you go to be sure that your investments had the results that were combined? And until there is progress on all these areas, governance, implementation, and accountability, I think we will continue to be disappointed by progress in this area. Final remark. It strikes me that it's probably implicit, but it seems to me that there is at least an implicit notion that technological progress is increasing inequality. And this always struck me as puzzling. It struck me that the essence of the industrial era was that machines made weak people strong, and the essence of technology is it makes stupid people smart. So why should that increase inequality? It's not obvious to me. If it is, well, not everybody can be a coder, it strikes me that's a trivial remark.
We will not quote you as regards the stupid people. Thank you. Thank you very much indeed. You asked for the floor, no?
And then to react to the question on cryptos.
Yeah.
There's, as you know, some of the appointments that have been announced there's been a number of announcements about possible member of the cabinet or other position. And you may have noticed that Chairman Gensler of the SEC is going to be replaced by Paul Atkins, who was at the SEC as a commissioner 25 years ago, and was in charge of the transition for financial position during the first Trump administration, but refused to join the cabinet, remain in the private sector, and now he's been officially nominated, and I think his confirmation is not going to be an issue. It's not controversial in any way, shape, or form. He's been very much more open on cryptos, rightly or wrongly. I'm not passing judgment on the cryptos, but he's much more positive on cryptos than, say, Gensler or the Secretary of the Treasury, Janet Yellen.
Yeah, yeah, sure.
Just to make that point.
But the question was, what do you think yourself of crypto? Not to...
myself?
Yeah, yeah.
I mean, I have two issues with crypto. One is liquidity, and the other one is transparency.
Okay, clear enough. André, you have the floor.
I wanted to mention that we have a huge resource in Europe, which is untapped, really. And Mario Draghi developed it very well, and Christian Sauter also very well. We have savings, huge savings. Unfortunately, we are resource, we have risk averse. We are risk averse in Europe. So today, there are a number of rules in Europe, I mean in the Eurozone, which prevents the development of securitization. We have 5 times less per capita securitization in Europe than in the US. Okay? I know that regulation in Europe, is in the Eurozone, is specific and tends to be, let me put it this way, more strict, more risk-averse than the one in the US. Now, this money could be used to finance a number of things which have to be financed, in terms of investment, in terms of, well, one thing which hasn't been mentioned on climate is that today climate risks are practically uninsurable. So they have to be covered by governments, one way or another. And the numbers are huge. You know, floods, fires, and so on. So there is a huge need for investment. There is a huge amount of savings available, and there is a number of regulations which stop that.
I entirely share the view, and I will make 2 remarks. First, the US is more socialist than the European, because in the US you have Freddie Mac and Fannie Mae, which are semi-public institutions and are helping considerably the commercial banks from having in their balance sheet too much risk. And it is very, very important in the difference between the US and Europe. That is a paradox. Not the only paradox. The other paradox is that we have excess of savings in Europe, and they have a need. They are badly in need of savings to the extent that they are selling the US each year a little more. And we have, if I'm not misled, a net international position in financial position of minus 90% of the US GDP. So we are in surplus ourselves in terms of net international position, and the US is selling itself. It's not sustainable in the long run, in my opinion. It is exactly like the 4 standard deviation over and above the other valuation. There is something in the US which is rather extraordinary, and with positive and also less positive aspect. Back to Europe, you're absolutely right on the regulation. I think that what you say on the banks and the prevention vis-à-vis the banks is not only the euro area. In the euro area, it is the central bank is not too dramatic on that, in my opinion. It is much more the rules for the European Union as a whole, exactly as the rule of the so-called Solvency II, if I'm not misled, are preventing our insurance company from investing in equity. So they are obliged to invest massively, which is stupid, in bonds, governmental bonds and so forth, and not in equity. So we have there something to correct, frankly speaking, because it's ridiculous. Our savings are not anywhere else because we have no pension funds in Germany, in France, and in other countries. They are massively in the insurance company. Yeah, pardon me? Yeah, but I have a lady before, John. Thank you.
I'm sorry. I'm sorry.
Please.
That's okay.
Go.
Okay. I'm sorry, it's maybe a little bit different what I wanted to tell you, but you know, I'm trying for the last 10 years to, Sébastien, you know that, to reconcile political science and macroeconomy from the point of view of indicators. Which type of indicators we use and what the value we give to dedicated indicators. And what is really striking for me, if you take all the message from political science, from people trying to reconcile that, for example, from Modelsky, Gilpin, maybe you know that, or even Rodrik or Acemoglu and so on, it shows something based, for example, on hegemonic cycles, is that the US are really now at the end of an hegemonic cycle with some deformed power, especially, no, but I'm sorry, it's not me, but I mean very, for example, if you take Modelsky work, it's really clear. And what I'm trying to say is that from this point of view, because this is geopolitics and finance and geopolitics and economy, from this point, these types of work, but also Hirschman, but also if you want to come before, it's Polanyi work and so on. It shows that, for example, the deformation towards monetary power is a symptom of the hegemon at the last 4 stages of the hegemonic cycle, which are very interesting work. And from this point of view, I just end with this.
Yeah, please.
Inequalities, polarization, violence in the society, and many of the, you know, institutional indicators have to be taken into the equation, not only, and to be integrated, you know, in the new indicators now, if we really want to build geoeconomy, meaning that we have to compute in another way all this type of indicators.
We take your remark into account, and it seems to me that we fully agree that we are not, I would say, comprehensive enough in our understanding of what's happening. Still, we are living in the real world, and in the real world, the hegemon of the US, which I consider myself excessive, of course, and probably based on some kind of bubbles, is there. And we cannot deny that it is there, of course. And fortunately, Europe and the US are in democracies, and in democracies, the people is exerting influence, and I hope that this influence will be more and more visible. In my country, we have some influence of our own people, historically and also today. So thank you very much, Madame. Do we have any other remarks? John.
Actually, Jean-Claude, I was going to invite you to make a remark on the following. The discussion of crypto, it seemed to me, neglected something very important. I came away from the annual meetings impressed at the seriousness of central banks to move toward a tokenized system. In other words, and you're a great expert on this process. Yeah. Is this going to happen? And if this happens, i.e. if we end up with a digitized, tokenized financial system that produces instantaneous real-time settlement, et cetera, even across currencies, yeah. Is there any role for crypto except for illicit means or for fun?
I did not. I mean, I could speak a lot on crypto. I think that we made collectively an immense mistake on letting the Bitcoin gallop. And when I see now that the Bitcoin is supposed to be a fantastic currency in the eyes of the new president of the US, I am appalled. This is pure speculative instrument. There is no doubt on that. It's not a currency. It has not the characteristic of a currency according to Aristotle. It does not keep the value, which is one of the three major, a good instruments for exchange, a good measure of value, and a good store of value, which is not the case. So, and all those equivalent currencies are pure speculative instruments, probably very amusing at the casino table, but apart from that, it seems to me that only the so-called stable crypto would be perhaps looking a little bit more like a currency. But I am struck myself to see the central banks embarking, because there are technology that are behind and could help considerably to diminish costs considerably. And now on the crypto or dollar or the crypto euro or whatever, which would be rigorously the equivalent of the notes. That is also something which is, to my knowledge, not the study is not terminated, because it's quite difficult to. The notes can be fully anonymous, and of course you have a way to control that, and you can stop more than 10,000 euros of dollars going through the border. But what about the cryptocurrencies issued by the central bank itself? The central bank would have to control if we do not want that to be abominable and utilized only by crimes and organized crime. So I don't know exactly how they will solve that, but that's another story. I see that time has elapsed gently. It seems to me that we are at the end of our meditation, and thank you very much for all the speakers and questioners.